Hey, what's going on, guys? This is Terrence Ray back at you with another stock market update. We got a good one going today. We got a rally in the market. The S&P 500, the futures are up 1.5%. You look over here to the left, it's up about 65 handles. Nasdaq futures are up a little over 2%. Uh, Dow futures are up 1%. The Russell futures are up 1%, and the Nasdaq futures are leading the way. So, with that being said, looking at that, if we're looking at the past week, maybe the past week and a half, ever since we made this low right here on October 27th. Now, what I have on, I'm showing the SPY, which is the ETF of the S&P 500. So ever since October 27th, we just had one, two, three, four with this big gap, five, six, seven. We had eight straight closes on a higher note, like eight highs, consecutive highs. And then yesterday we had that down move. And then today, the market just took off and got all that back. Now, what you're looking at on the screen, you can see this, the blue right here is showing this gap from back on September 21st. We had a gap in the market. So we have successfully closed that gap and the market pushed through it. And what I have on here, you can see these yellow lines are Fibonacci extensions that I drew on a intraday time frame, and you can see the market is right up against this last level. And so when I see stuff like that, and I could see that we had a run up in my mind, I could be wrong. And also on my stochastic, I have a full stochastic down here. If you look up, you got different types of stochastics. You got the fast, then I think you got the slow, and you got the full. And the original one, if I'm not mistaken, is the full. That's the one that I can't think of the trader that came up with it. I think it's Lane something, Lane or George Lane. I think that's it. Someone can Google that. You can check me on that. But anyway, I have read his book. I flipped through it. And so I like to use it for overbought levels and things like that. And so I am very high on the stochastic. With that in mind, I want to look for a place to short. Now, you saying I'm not bearish the market at all? Not overall. I do think that the market will continue I think we're going to rally into the end of the year and take these highs out. But we do for a pullback. At some point over the next, in my opinion, the next 9 days, 9 to 10 days, we should get a pullback in here. Should get somewhere down into here. And it's almost like a rubber band. The rubber band at some point, can stay close to the mic. The rubber band at some point, you pull it back when it pulls back, and then you let it go, pow, and then it goes up. So what we got right now, it's the market is completely stretched. So we just need a pullback. Or I need a pullback. So what I did, I went to the triple Qs. Instead of putting the put, I thought about putting the put spread on here in the SPY, but as you can see today, whenever the market makes a move, it seems like tech, which is highly represented in the triple Qs, seems to outperform the S&P 500, either to the up or the downside. So on an up day like today, we up two. You can see it's moving towards 2.25%. That is up. If I get the down move that I'm looking for, it would be. I would think that the Qs would outperform it to the downside as well. Well, that's why I went to the triple Qs, and we'll pull up the trade tab. We'll pull up the Qs. I went 35 days out, and I just went one in the money. This is a put spread, or you may hear some people say a long put spread. You may hear some people say what's another way you can call it? An in and out spread. It's just, or a box spread. The box would be 379 to 377. It's a $2 wide spread. So with it being a $2 wide spread, me personally, I don't like to spend more than a buck to maybe a buck oh five, but I like to be right around at least 50% or less. Now with this one, I only had to pay, you can see over here, I paid 87 bucks for it. And I went one in the money, one out, and then that's that. I paid 87 bucks for it, and I'm just looking to, maybe take, 40, 45 bucks out of it. And if you want, I could have did two or three of them, whatnot, but just do one, let the market move a little bit. Now, let's say the market moves, continues to go higher. Then I may come in and throw another one on at another area, right? And that's that. This trade is a high probability trade just by if I threw it on right now, you can look at it, lock it in. It's actually a little cheaper right now. You can see down here, I got a 65% chance of making 50% of what I pay for the trade. So you pay, it's a small trade. Most of the trades that I do in this account and I do to show on social media, you don't need a whole bunch of money to do these trades. Now you have a large account, you can always, do five of them. Or you can just widen the trade out. Maybe buy the 380, sell the 376. Lock it in. Now I'm paying 166 for it. Max profit is a possibility of making 234. And you still got a probability of getting 50% of that, a 65%. So you can either make the spread wider if you have a larger account, or you can buy this, like keep it the same way and do five of them, right? Instead of paying 83 cent, you could do five times that or whatever. I generally don't like doing that. I like to stay small and then just go find another chart that's stretched out, right? So on the Tasty Trade platform, we could easily just come over here to look over here on the watch list. Now I could do it over here on the watch list, but I like to keep my main watch list up over here. So I'll come over here and look at Tasty and go 52-week near high. Now these are the stocks that are near a 52-week high. And what we see right up here at the top is NVIDIA. Now let's take a look at NVIDIA. NVIDIA does have earnings on November 17th. No, excuse me, not November 17th, November 21st after the bell. So that's in 11 days. That would probably keep me out of that trade or out of doing it. What are you doing? So looking at this one, we can see how stretched this is, right? You guys can see we got a gap up here, and then we can just see the market just running. Now, it's coming up near close to the all-time high. So this may not be a bad time. Let's pull up a year-to-date chart. So this would be year-to-date, and we still got this hole right here. You guys mark my words. I don't know when, but at some point, the video gonna close this hole. This gap will get filled. And that's one of the things that, don't worry me about the market because I'm gonna make some money during it. When we do get to sell off to close this hole, I'm gonna make some money in it. It'll be an easy trade because the market will be falling down like the elevator is crashing or something. Which, we can look forward to that. We can look on the video, we can see from this right here, you see this long wick started this up move at 1, 2, 3, 4, 5, 6, 7, 8. 8 straight days with with a higher close than the previous day. Nine is around that time when I like to start looking at shorts on it. I will continue to follow the video. Only thing about the video with it being a large, or I should say a high price stock, You're not gonna get $1 wide spreads. I mean, or strikes. Got $5 wide strikes in here. It's gonna cost more to be a to do this spread. You're gonna pay 250, 252, 250. Risk 250 to make 250 if you put this on right here. That's the only. If you come out 42 days, same thing. It don't matter where you go. These are gonna be $5 wide. But this is a way if you have a small account to short the market. You know, if that's the bias that you want to express, and it's not real risky. Now you may say, if you just buy the put outright, of course you can make more money by just buying the put by itself. Like if I just bought the put in the Qs by itself, but look how much I got to pay up for it. I got to pay $731. So you're gonna pay more money to just buy the put. If somebody was just saying, why not just buy the put? When I put a wing on it, now look at the price. It's real big. If I want to make money, I'd rather just buy more of these without having to put up $700. So with that being said, guys, let me know what you think about the trade. Once again, if you want to open up an account with TastyTrade, I have a link in the notes. They do give referral bonuses. So yeah, I get something for it. But I actually use that's the only platform that you guys see me use. I used to use different ones, but this is the one that I'm using mainly. And I use it for the show and to make my videos. I love the platform. I like this mainly on the option. I love my expected moves. That gives me my trading range for that particular period that I'm trading. And the market, a lot of times it's around that range for that time period. So open up an account with Tasty Trade, and the link is in the show notes if that's what you want to do. And hit the like button, hit the subscribe button, and share the video, please. And with that, guys, I'm gonna be out. Peace.